What's going on, guys, and welcome back to another video. So over the last few weeks now, we've started to go through my 5-year plan on going from 0 to 1 million by November 2026. So we're going to pick up where we left off, and one of the 7 income or investment vehicles that I want to get to this 1 million is a dividend portfolio. So we're going to be adding 6 new stocks to my stock dividend portfolio today on Trading212. So with all that being said, let's dive right on into today's video. So just firstly, a very brief recap. Overall, in this stock dividend portfolio, I want to have 50 investments or 50 stocks. Now again, we'll make a video down the line of why I want 50. There's no magic number here. Some people might think that's too much and some might think it's too little. But again, on the left here, we can see there's 11 sectors in the market. And over the past few days now, we've added 8 stocks across different sectors, which we can see here in column D: Chevron, 3M, McDonald's, Coca-Cola, Johnson & Johnson, Goldman Sachs, IBM and Realty Income across different sectors. Now we can see here as well in column B, my target per sector. So in some sectors, I want to have 5 holdings, where in others I want to have 4. Again, all adding up to the 50. Now, as we have 8 already, we still are 42 stocks outstanding. So today, as discussed, we're going to be adding 6 brand new dividend stocks across 6 different sectors. Now also, as discussed as well, I want to have 50 stocks and I only want to invest €10 into each of these 50 just to kick off the portfolio and to get the groundwork in place, again, which will equate to €500 in this dividend portfolio to start off. And then once we kind of have the groundwork built there, we can start branching out to my other 6 income streams to get to this 1 million in 5 years. So again, we're going to just start slow and steady with this dividend income portfolio, because personally, definitely having a strong, solid foundation really will reap rewards long term. So I do want to take my time with picking the best dividend stocks and diversified dividend stocks that I see fit. So here we are on Trading212, where we can currently see we have €220 overall in this account of value and €80, €79 and 38 cents invested. We can see we're down about 54 cents at the moment, which again is completely understandable considering we only started this portfolio, and it will take time for it to bed in and slowly start to gain some capital gain. Now also, one of the main reasons besides kind of spreading out my overall portfolio to 50 stocks of why I'm only putting €10 in at the start into each is mainly because of dollar cost averaging. Now my old portfolio, where we made about 30% profits, I was a strong advocate for dollar cost averaging, and that will be no different here as well. So thankfully on Trading212, again, I have a link in the description below if you'd like to sign up here, but thankfully you can buy fractional shares. Now that really is a huge benefit if you don't, or if you're like me and you don't have a large capital at play at the start. So it's really handy here, especially if you want to buy fractional shares within a stock. Now, another very handy feature that I like on Trading212 is the pie feature and the ability to kind of clump different sectors or kind of break out different sectors into different portfolio pies here, which you can see on the left. We made 11 portfolio pies, 1 for each sector. Now, again, as discussed, we're going to be investing in 6 new sectors in a few seconds now. But again, once we have the kind of €10 into each of these 50 stocks, we will then start dollar cost averaging in the stocks that are in the red, again, driving down my overall average cost. Now again, different sectors react differently to different market conditions, as I always say. So again, they'll all react differently, i.e. like energy might go up 10%, whereas financials might drop 5 or even 10%. And in that case, we would start investing further in financials, again, driving down my overall average cost. So long term, we'll be making even bigger gains once it bounces back. Okay, so without further ado, the first stock we're adding to my portfolio today is in the energy sector in the form of ExxonMobil, ticker symbol XOM, which is currently trading at about $63.48 a share. Now we can see here as well, it's currently paying an impressive dividend yield of about 5.55%, and it pays quarterly. Now if you've seen my prior videos, which I'll link in the description below, we've also added Chevron to my energy sector portfolio. Now overall, I want to have about 4 or 5 overall energy stocks. So these are the kind of 2 older school stocks in the form of ExxonMobil and Chevron. So probably the other 2 stocks I will be adding here down the line might be in clean energy, as that is certainly the way forward. The second stock will be in the industrial sector. Now, if you see on my prior videos as well, we currently already have 1 stock here in the form of 3M. So Caterpillar is going to be the second stock out of the 5 that I want in industrials. Now its ticker symbol is Caterpillar CAT, and it currently has a dividend yield of 2.14%, which again isn't nothing to write home about by any stretch of the imagination. Now, as mentioned earlier as well, I do want to have an average overall dividend yield of about 3%. So hopefully the likes of ExxonMobil, which you just saw a few seconds ago, will certainly drag this average up as well. Now, the 5 stocks today, which we'll look at later on as well, is an average yield of 3.3%, which I'm quite happy with. Now, you can obviously get a lot higher dividend yields than that, but in my own opinion, it's not sustainable long term. So that's why I do want to kind of hit the overall 3% average. Now, it's currently trading at €207 Caterpillar is, or $207 should I say, and it has a very impressive 28 years of increased dividend payments, and it's one of the dividend aristocrats. Now, this dividend as well is paid on a quarterly basis. Next up, we're in the consumer staples sector in the form of PepsiCo, ticker symbol PEP. Now, we already have one of its main competitors already in the sector in the form of Coca-Cola. Now, again, usually I wouldn't be an advocate of just buying each other's competition because, again, they kind of counteract each other and they kind of offset. But again, you'd be very surprised. We could even make a video down the line as well of the detail. Now, PepsiCo obviously isn't just a drink or a mineral. There's a lot of behind the scenes here as well that I was very surprised with in terms of the product offerings. Again, we'll discuss that in another video down the line. But for now, currently, PepsiCo is trading at $163 a share, and it has a dividend yield of 2.63%. Now, one thing that struck me here is that it has very impressive 49 years of increased dividend yields, and just like Coca-Cola, or else even Caterpillar that we just discussed, it's certainly one of the dividend aristocrats, and it pays quarterly. The fourth stock today is in the healthcare sector and will join Johnson & Johnson in my portfolio, and that is AbbVie, ticker symbol ABBV, which is currently trading at $118 a share and has a quite impressive yield for a healthcare stock of 4.75%. Now again, another thing, just like Johnson & Johnson, it is a dividend aristocrat and it has paid a very impressive 49 years of increased dividend payments, and it is paid on a quarterly basis as well. Now, just before we get into the fifth and sixth stocks, it is worth noting that I'm currently in the process of making a dividend portfolio tracker on Excel. So once I have that fully done, or once I'm happy with it, I will share that with you as well, and I will give you the option to use it if you wish, free of charge of course. So again, I'm in the middle of that, and you'll be surprised how long it actually takes to get it right. So again, it might take another few days, but again, I will let you know once it's complete. So straight back into this now as well. The fifth stock we're buying today is in the financial sector, and it's going to join Goldman Sachs in my portfolio in the form of JP Morgan & Chase, ticker symbol JPM, which is currently trading at $166 a share. Now, it has a modest enough dividend of a 2.4%, but you kind of expect that with a lot of these blue chip financial companies. So again, it's just one of those things really. Obviously, different sectors have different portfolio or different average dividend yields. So again, this pays on a quarterly basis as well. And the sixth and final dividend stock we're investing in today is in a sector I'm very optimistic about and quite interested in the form of real estate. Now, this is Essex Property Trust, ticker symbol ESS, which is currently trading at $357 a share and pays again a modest enough dividend yield of 2.34%. But we can see down here it is quite consistent in terms of dividend increases over 27 years at this stage. Now, unlike my other holding in real estate in the form of Realty Income, which pays a monthly dividend, Essex Property Trust pays a quarterly dividend. Now again, it doesn't really matter overall. Again, it doesn't necessarily mean you're making more if they paid quarterly or monthly. Again, it's all the same amount, it just gets divided differently. So again, I'm really looking forward to adding even more positions after this into the real estate sector as well, because I'm quite bullish within this market. So in summary, on screen we can see the 6 dividend stocks that we are investing in today. Again, very small amounts of capital, only €10 in each, which again will equate to €60. Again, small, steady, consistent growth will definitely make the difference long term. And as I said earlier, I do want to kind of do this very slowly at the start once we build the foundation, and then we can start ramping up the amount of investment capital we're putting into this portfolio. Now, in the next video, we're going to invest in 5 stocks. I'll probably make this Monday or Tuesday of next week. At least 5 that is, but a minimum 5 will be the 5 sectors here that we didn't invest in today in materials, consumer discretionary again, which you can see on screen, tech, communication services, and utilities. And finally, as well, as stated earlier, I did want to have an average overall dividend yield of 3%, and the 6 stocks we bought today have an average of 3.3, which again, I'm quite happy with. So that's kind of where we're at in terms of my dividend portfolio at the moment. That's kind of, I just wanted to give a brief overall synopsis or summary of what I want to invest in today and my kind of reasoning behind them as well. So I hope you enjoyed the video. And again, as stated earlier, I will be carrying on this portfolio over the next few weeks. And once we have the 50 stocks up and running, we'll then start looking elsewhere in terms of my other 6 investment vehicles that I need to start to get to that €1 billion in 5 years. So I hope you stay tuned for that as well. And again, if you're new around here, it'd be much appreciated if you consider subscribing to the channel. So thanks very much, and I hope you enjoy your weekend, and I'll see you all in the next video.